lag behind. Well, the euro climbing to a 5-month high against the dollar today, rising to an intraday high of $1.29 after a German court affirmed the European Union's bailout plan. The ruling clears the way for Germany to fund its share of any future bailouts needed by other countries. Meanwhile, U.S. Treasury prices fell, lifting yields to 3-week highs. The 10-year yield ended the day 1.76%. This is up 5 basis points. Well, Larry Shover is live in the pits of the CME to tell us what's happening and the trading pits down there. Chris Middleman giving us his top 3 plays. His last call, by the way, on this show is up almost 50%. Wait till you hear what he's recommending right now. And Jim Rogers, there he is. He's telling us the one European country he's looking to put his money into to work with. Let's start with Larry Shover at the CME. And Larry, it was going pretty well, kind of a calm day on the market, but was going up. And then it had this drop into negative territory. It finally ended up almost flat. What was going on there? What were the gyrations all about?
Well, the gyrations I could talk for days about them. Credit downgrade warnings. We have fiscal cliff issues. Europe's not growing, but traders behind me are listening and hearing for the printing presses. Make no mistake about it. Right now, what you see right here is what we're going to see tomorrow. $300 billion of asset purchases. That's what's holding up the stock market. It's nothing but smoke and mirrors.
By the way, we had the German court decision. A lot of people said, well, that clears the way for money printing. The German courts are not the German people. I'm getting a sense that the German people are getting fed up with bailing out countries like Greece. Is there any false optimism, Larry, about what the German courts did?
Absolutely. And let's get one thing straight. The German people never, ever, ever wanted the Eurodollar even to begin with. And so they're sick and tired of all this. They've made some very hard choices. Consider the fact that they absorbed Eastern Germany not too long ago. They implemented a lot of austerity to get to where they are today. So when there's problems in Spain, Italy, and now France, hey, who can blame them? And the courts are saying, like, we're going to be liable for $190 billion, and that's it. The people are up in arms right now, and don't make any mistake about that right now.
All right, Larry, stay with us. We're going to go back to you. We want to bring it back home with Chris Middleman. He's managing partner at Middleman Brothers. And, Chris, let's get right to it. Last time you were here, you recommended Avis. Avis is up about 50% since the last time you recommended it. I understand you're still going with Avis. And what other stocks do you recommend right now?
We think Avis is still undervalued. It's gone up a bit. It's around a $16.60, I think, today. But the stock has got about $3.20 in free cash flow per share. That's about $400 million of free cash flow. I don't see a reason why it shouldn't be trading at closer to maybe 9 times that number. That would be about $30 a share.
We see, by the way, we see Revlon there.